I will never have to work a 9 to 5 for the rest of my life thanks to this one concept. And the concept I'm talking about is the 15-minute opening range breakout strategy. And it is actually pretty easy to learn, guys. So I'm going to break it down for you right now. All right, step number one, we're going to find the first 15-minute candle on the day, opening at 9:30 a.m. New York time and closing at 9:45 a.m. New York time. And we're going to chart out the low and the high and label those our 15-minute opening range high, 15-minute opening range low. All right, step number two is finding our draw on liquidity. Since we got such a strong up close move here, I have a bullish bias for this opening range breakout, so I want to see us target buy side liquidity. So I'm going to chart out up here my London high, which is going to be my first TP level that I want to see price go get to. And then I'm going to chart out my full TP level, which is going to be at the very top of this range, which I'm going to label my Asia high. Don't get me wrong, you could have taken the aggressive entry off the test of the 15-minute opening range high and still caught about 200 ticks right here. But I'm always looking for the full expansion. I don't want to just catch the first move, I want to catch the full move. So I notice that this becomes a 15-minute bullish fair value gap right here, and we get perfect retracement right into that. So now I want to see some kind of reaction off of this level that's going to take us up to that Asia high. This is where combining ICT concepts and the 15-minute orb is absolutely golden. I noticed that we came down and we swept internal liquidity going into that 15-minute fair value gap. So my entry model, the GUI model, all I would do is wait for that sweep and then look for the first 1-minute bearish fair value gap to get inversed. And that's where I'd want to target my entry off of to get into the longs. So let's see it play out and see if we get the IFEG. Boom, right there, you notice we get a close above that 1-minute bearish fair value gap. That is going to give me my entry level, my IFEG. So this is where I would put my entry right at the top when we retest the IFEG. I keep my stop below the wick of the IFEG. I target this recent high for a first TP at about a 1 to 2 risk to reward. And then I'm going to target that Asia high for a full TP that gives us about a 4.6 risk to reward. So let's see how this one plays out. We have our entry, we're holding it. Boom, we take first TP, about 200 ticks right there. And we are still holding as long as this IFEG holds us up. Now you could move your stop loss to break even. If you got stopped, you could get a re-entry. But I have so much conviction in this trade going all the way up to that Asia high that I am down to keep holding it. And just like that, we go and hit full TP for about 480 ticks. I made a free PDF teaching you exactly how to trade the 15-minute opening range breakout strategy. All you have to do is comment the word breakdown, and I will shoot that over to you right now.